Okay, welcome everyone. Welcome to the webinar. Give me a heads up that you can hear me, please, and that you could see me. Just let me know that the audio is good, and we will get started. Welcome to the Trap Trade and Reversal webinar. My name is Lee Goldstein. I'm the Trading Director at 10 Minute Trades. Okay, I want to thank you for joining the webinar today, and I'm going to go over a favorite setup of mine. Two favorite setups of mine and setups that we're using in the trade room quite a bit these days, especially good setups for volatile markets. Once again, my name is Lee Goldstein. I'm the trading director for 10 Minute Trades. All the trades we discuss for educational purposes. It is possible to lose money trading futures, so please don't forget, don't trade money you can't afford to lose. And we trade the appointment-based trading method. We use the NinjaTrader platform, and we trade futures. And next week or the week after, what's coming up is earnings season. And in earnings season, we devised a great methodology to trade futures on stock earnings. So when we talk about the fact that we're trading earnings season, don't get confused. We don't trade the stock price. We trade futures. We have a whole method that we use for trading earnings. And earnings season is getting ready to start all over again. We're looking forward to it. Appointment-based trading, trade on a schedule. That's what we do at 10 Minute Trades. We have a system. We've got software. We've got a trade room. You can do what we do. You can trade in a prop account. You can trade in a cash account. All trading has risk, and all trading has difficult scenarios that come up, whether you trade cash or prop. Everybody has different reasons why they might choose one over the other. Prop account trading has become unbelievably popular because you don't have to have any money to get an account going and to test strategies. So it's a really good way to learn how to trade for sure. And if you become a good trader, it's a way to potentially take someone else's money out of the market. And that's why prop trading is so popular. But there are a lot of rules. There are a lot of expenses. It's not as easy as everyone says, but it is a very interesting way to trade the markets these days. We have four elements that make up our trading system. The WMM, which is our weekly schedule. The weekly schedule is free. Anybody can get it. You just go to our website, www.10minutetrades.com. Opt in for the video, how to find your own 10-minute trades. And if you do that, we'll put you on our list to send you our free weekly schedule. So why is it good to get the weekly schedule? It's important because you want to know if you're making a trade or in the market trading. You want to know when news is being released so you don't get blown out of a trade by a fantastically crazy market move that you weren't expected because news just came out. So it's worthwhile to get the weekly schedule no matter what, so you know when the major reports are taking place during the week, and you could trade around them or trade them with us. I mean, that's the idea. So this week, our weekly schedule showed quite a few interesting events. Our schedule shows the trigger time of the event, the time the event takes place, whether or not our trade room is open. That's an important part of our weekly schedule. The actual exact name of the event we're trading, and then the instrument we're looking at, the risk we associate with this particular event, and then whether or not this event has a DMM, which I'll get into in a minute. What's a DMM? That's our daily trade report. It's element number 2 in our system. And then we do sometimes have some notes and information on the weekly schedule. We let you know when we're streaming on YouTube. And we have what we call a watch rating on certain reports. Some reports might be new, so they might be a report that we're starting to watch. Some reports might be a report that is fading in importance, so that becomes a report we might watch. And then maybe a report's not performing well, so we might want to put some extra attention on that report, so it may be on watch. So element number 1, the weekly schedule. Element number 2, the daily market movers. A daily market mover is a trade action report, and many of the events that we trade in our trade room get this report. and the report has very useful information on it. It has, of course, it's always going to have the name of the event, but it's going to have a risk level. It's got history of the event. It's got a journal, a mini journal, sometimes up to 6 months of data on the report. This is the U.S. retail sales report, and this is a journal of how it did over the previous 6 months to the date of that report. It also shows the instrument. This report is based on trading, and then there's some commentary about the report. The DMM gets sent to our members the day before the event, so they know the way we're thinking of trading the event when we get to element number 3, which is our trade room. Element number 4 is the software. Everything that we do does take place in our trade room. We have information about the current markets. We have up-to-the-date analysis of the current markets. Maybe the market is so volatile, we're going to increase the stop on a trade. So the trade room is very important because the markets are always changing. They're always moving. News comes out when you don't expect it. It's very important, if you can, to make the trade room a part of your subscription at 10-Minute Trades, because in the trade room we're always updating, teaching, and going over the daily report and trading it the best way that we can. And we trade it using our News Trader software. We're at version 11 now. We've been updating our News Trader software literally for the full 8 years I've been here. We've been constantly updating the software. Our software is a custom strategy add-on to NinjaTrader. What that means is it's a small program that downloads and installs into the NinjaTrader platform, and it becomes a part of the platform. It becomes integrated. Our strategy, and we have 3 of them, have multiple setups. The News Trader Suite is our main strategy. We're going to talk about that today, and we're also going to talk about the trap trade today. The trap trade is a separate strategy. It just loads into NinjaTrader. Our main strategy, the News Trader Suite, has, and I use the word main is not really the correct connotation. It should just be one of our. We have 3 main strategies: News Trader, Trap Trade, and the Magnet Trade. And within those 3 strategies are other setups. For instance, the reverse continuation, trap squeezes, reverse. You have different setups within the strategies. I'll show you exactly what I mean. Our software has multiple setups. Like I just said, reversals, trap trades, breakout trades, spike trades. Those are all separate setups, range trades. You can automate those setups. You can automate your entries, your targets, and your stops. And also our program is what we call it. We call it a super ATM, an automated trade manager. When the software puts orders on the chart, it can then manage parts of the trade. So in other words, today we're here to talk about trap trades and reversals. So we trade a lot of FOMC statement trades these days. The FOMC statement has been one of our best trap trades over the past year. And I'll get into what a trap trade is, but I just want to show you what I mean by an automated trade manager. Our software is going to put the orders on the chart. Those X's are the orders. When orders get hit, things happen. Targets move, stops move, but they happen in a way that you plan it out. That's what an automated trade manager does. It helps to manage where your stop might move to if your target gets hit, and it also might move your targets, but it'll also move your stop. If your targets get hit, very often you might want to move your stop to what we call safety, an area that gives you a profit even if the trade changes direction and takes you out. Those types of features are called ATM features, automated trade management. And most platforms require you to learn a simple programming language to do automated trade management. With our software, you don't have to learn anything additional. You just enter the settings into the software, and it manages the trade. It manages as much of the trade as you want it to. Sometimes you don't have a choice. Sometimes a trade has to be managed. In other words, our software is not a robot. In theory, a robot manages a trade from start to finish. Robots require a tremendous amount of configuration. They don't work forever. It might work for a week or two or a month, and then it has to be completely reconfigured. Our software is an automated trade manager. You can have automatic entries, or you could have discretionary entries. You could have your stop move when a target gets hit, or you could manage your stop move with trailing stops, or you could move it manually. So an automated trade manager, it can have some trades that take place totally automated if the targets get hit, but more often than not, a program like ours, automated trade management, or ATM, it's managed semi-automated, and you then manage your exit. So your orders are put on the chart. When your orders get filled, your stops and your targets are put on the chart, and then you often manage the trade manually. And I'll show you. You'll see what I'm talking about. It'll be very clear. So the four elements in our system are the trade room, the software, DMMs, the daily market trade reports, and our weekly schedule. And what actually triggers an appointment-based trade? So, you look at what happened today, and we had a natural gas trade that was just really crazy. And I'll show it to you because it was really, really something else. It really exploded. Natural gas moved way faster than anyone expected today. So here's what happened. I'm only going to talk about the breakout today because it shows what happens when an automated trade manager works totally automated. Here's our orders, and the trade was over. In that 1 second, we made over $300 on the trade. It hit both our targets. The targets were put on the trade when the news came out. So the question was, what causes these reports to move the markets? And it's really very simple. What happens? You have a calendar, and on those calendars, there's an expected result for the news to have. So for instance, we might be looking at Forex Factory, and Forex Factory is a calendar that has news reports on it. When you get to the natural gas report, what you're going to see with natural gas, let me get to it here, is there is an expected forecast, and they were forecasting a build, more inventory available than what they were expecting. In other words, they were expecting more gas rather than less gas to be around. And they give it a specific number, 66 billion cubic feet. When the news came out, though, it was way less than expected. It was 53 billion feet, which is way less than 66. So what happened? You saw what happened. There was less gas available. Natural gas is one of those events that very often follows the news. If there's less gas available, that's very bullish, very strong for an upward move. The news came out, it burst through our orders, filled the orders, hit both our targets, gave us hundreds of dollars in profit within a second. Within a second. That's why these trades get triggered. The news comes out and it's different from what's expected. Very simple concept. There are multiple categories. 3 are the main categories we look at. High impact economic reports like GDP, natural gas is an economic report, believe it or not. It's a storage report, but it's very similar. You have economic reports. You've got big company earning reports. Of course, they move markets. Look at this Amazon trade. Amazon, like I said when I first started this webinar, we do the research. We know and we study how Amazon releases their earnings. Amazon releases their earnings in a manner that is very reliable. Our software puts our orders on the chart. We actually watch Amazon stock. and we watch it to see if it helps us in our trade. Our orders are on the chart. Those X's of the chart. Amazon earnings come out, explode the NQ, which is what we're trading. It goes through our orders. That was over $600 in profit on an Amazon earnings trade. It was about 5 seconds being in the market. So we devised a great way to trade stock earnings using futures. We trade the NQ futures for Amazon earnings. And very often we have great outcomes trading those earnings. The third category, market open and close. When the market opens, it creates a gap. Trading that gap is one of the ways that we trade. And nowadays we're trading market open. Closes also move the markets. The close is harder to trade right now. So we're concentrating on the market open. Every morning, almost every morning when we have a trade room, we're in there trading the market open. We have a couple of different setups that we're using. Here's an example of what a market open might look like. We love our MNQ setup. It's been working very well. And when we first started a couple of weeks ago, we were trading the YM range trade and MNQ breakouts in the middle. And we were doing rather well with both. The YM has become a little bit more difficult in the past couple of weeks, but the MNQ tends to explode through our orders and give us a profit most mornings. It's been really good to trade. So we are definitely these days trading market opens in our trade room. And especially with this market shutdown, we always have something to do almost every day, because you can trade the market open every single day if you want to. So no one's happy about this market shutdown. It does affect the government reports. A few of them are government reports, not all of them. So until the shutdown ends, there may be some reports that don't get released. And that's a pain in the neck. But, we went through the pandemic. We'll survive the shutdown. So what exactly is a trap trade? So a trap trade is an event that we have studied. Every event that we trade in our trade room, we study. We don't do a massive amount of indicator trading. In other words, if you look at our charts are really very clean. They don't have a lot on them. We have volume on our charts. We have the squeeze on our charts. And we have the high of day. The low of day is the red line. The green line, dotted line, is the high of day. We put pivots on our chart, and we put the VWAP. And we don't really do much more else than that. And we have a lot of trades that we take around the pivots, around levels. Those especially are reversal continuation trades. We're going to talk about those. Those we trade around the levels that we have on our chart. But the trap trade is a different animal. The trap trade is an event that we think is going to reverse. And we are pretty sure it's going to reverse because we've studied month after month, if it's a monthly report, how this event behaves. And if it's an event that doesn't blast in one direction, but it tends to reverse, then we have a special setup called the trap trade that lets us trade those reversals. And that's what a trap trade is. So the trap trade, and I'll show you a trap trade. It's a setup where we expect a reversal on a particular event. And when it reverses, that's how we make our money. If the price goes up, we sell the market. If the price goes down, we buy the market. And when we get the reversal, that's when we get our profit. So let me show you one of the best trap trades that we've had all year has been the FOMC statement. It's been fantastic. How do you set up a trap trade? So remember I said that our software is configured inside of NinjaTrader. So now this is the actual NinjaTrader live charts. All right. They're connected to the market right now. This is the market moving. When you right click the chart, we click the word strategy, and that brings up a dialog that lets us choose trap trade as one of our setups. Then I just enter some items into the software. I tell the software, what time do you want to trade? So if, for instance, if I wanted to set up a trap trade right now, just to show you what it could do, I could do that. I could set up a trap trade. Now I hit the wrong key by accident, I'm sorry. I could set up a trap trade. I would put in the time, just looking at what the time is right now, it's 12:20. So let's put a trap trade in for 12:22 and 15 seconds. I have number of positions. It's already a 1 for each position. I have 2 positions I'm putting on. I have a stop that I'm putting on. And then I have what we call tiers. Tiers are orders, and I'll show you what I mean. They're brackets above and below the price. So now what I'm going to do, in 30 seconds, my trap trade, okay, here we go. It's generated immediately, and I'll tell you why. It's because I didn't put the time in. I'm just moving my orders. I don't want it to trigger yet. So a trap trade puts 2 orders above the current price, orange arrow, 2 orders below the current price. If the price goes up, it'll fill me short. If the price shoots down, it'll fill me long. So what happens is news comes out and it goes in one direction or the other. It'll jump up and then reverse, and we make our money when it changes direction. That's what a trap trade is. So here's a real trap trade we took on the FOMC pretty recently. Let's see what happened. Now the FOMC is a trap trade. We have a setup. We send our members a DMM. Remember, we talked about a DMM. Everything we do has a relationship to what we're doing in the trade room. So we have our DMM. We're in the trade room. We're setting up our software, and we entered those numbers into the software. The brackets, 48 and 68, were the brackets we used. And then we got to the trade. And we also send our members on a Wednesday the FOMC trap trade. We also have a breakout trade. We have 2 setups on FOMC. We have an NQ breakout and ES trap trade. 2 o'clock last September, our orders came on the chart. Let's see what happened in real life. The news came out. They dropped the rates. Remember, the price went up, filled me short because it went up. And now I'm expecting the market to go down. Or remember, I had a second order. It filled my second order. I took the opposite orders. They are now my targets. I moved them up a little bit because they were very far away. And now, as the price starts to reverse, I'm making my profit. I brought my first order up to grab some profit. I moved my stop to safety. Now I'm going to trail down if I get the opportunity till I get taken out of the trade. So I kept trailing down. I moved my target further away to make it bigger, kept moving my trail down. This was an awesome trade. We're making quite a bit of money as the price goes down, down, and down. And I still am trailing. And when this trade was over, we had over $500 in profit in that amount of time. It took about 35 seconds. It worked exactly as we expected. The price went up. It then reversed, and we made our money on the reversal. That's the trap trade. Then we noticed that there might be an opportunity for a reverse continuation trade. So I put another short trade on, a discretionary short, using the ES, all right? I put it on right there, looking to testing towards the low of the day because it appeared that this market was selling off from the news, and it did. It went and it hit my target. I shrunk my target a little. We made another 150 on that first reversal continuation. Then we took another one for a test of the low. It hit that one. We wound up making about an additional 300 extra dollars, 2 extra setups, trading reverse continuations with the trap trade. The idea with the second type of trade we're going to talk about today, the reversal continuation is just simply a discretionary trade that you put on the chart when you feel you've reached a trend that's beginning, or you're in the middle of a trend that you want to take advantage of. Maybe a news result comes out and it creates a move in the market that you want to grab beyond your original trade. That's what the reverse continuation is. And let me show it to you again, because this particular recent FOMC trade has both things that I'm teaching today. It's got the regular trap trade. Okay, that's this. We put 2 orders above the current price, 2 orders below. The market goes up, it's going to fill us short. Then we trailed, like I showed you, to make our profit. And we made quite a bit of profit because the market reversed very strongly and it allowed us to trail. When our trail was over, I put a discretionary short on because I felt the market was bearish. It was going to test the low, is what I thought. We'd already tested the high. In a matter of seconds, I decided I put on that discretionary short, and it worked perfectly. The price went down. I did shrink the target a little, got taken out, and then I said to myself, you know what? We watched a little bit. Price kept going down. Now I was certain it was going to even test the low. We took that second short, and that's exactly what it did. Took us out of the trade, giving us, like I said, hundreds of dollars extra. And that's the idea that we're looking for, is to take these trades. And yes, they work in prop accounts, cash accounts. No reason why you can't trade it. Any type of account you trade in, you can trade these types of trades. So the trap trade is a specialized reversal trade. And we take the trap on events that we know are going to reverse. Is it going to work every single time? No trade works every single time. But trap trades, like our breakout trades, have a high probability of working because we've studied these events. We watch them. Reversal is expected, okay? It's absolutely expected. The reversal continuation is a complete standalone strategy. You can use it with another strategy. You could use it with a breakout. You could use it with a trap trade. It's a separate strategy. And what do I mean by that? So when we have a setup, right? Just a few minutes ago, I put a trap trade on the chart, right? You saw me do it. We label all our trades. So we're going to label it trap trade. All right? Why do we label it trade? Because when the trade is in the control panel, when you label it, you see the name. So now, maybe I'm watching this market right now, and I think it's great for a reverse continuation. Right-click the chart, click strategy, double-click news trader, change breakout to reverse continuation. One contract is already set. 15-tick target is already there. 25-tick stop already there. I don't even have to do anything. I could use those default settings. Just make sure my account is set for a reverse, for the sim account that I'm showing during this webinar, and label the trade GC reverse continuation because I'm on the gold chart. Apply it, okay it, turn it on in the control panel, and now I have a button. If I want to go long immediately or short immediately to take a reversal of this price action or a continuation, short would be a continuation, the price is going down. Maybe long would be a reversal off the low. It doesn't matter. Short is short. I take a short if I think the market's going short. If it does, it'll hit my target. If I want to expand my target, I could expand it. I could shrink my stop. I could make my stop bigger. Reversal continuation is a discretionary entry. It's a way to enter the market when you want to, and you can go instantly long or instantly short. And that's why we call it reverse continuation. If you're trading the news and the news move is all to the downside and you go long, then we call that a reversal. If the news is all up and you continue up and the price continues up, well, then of course we call that a continuation. The reversal is the opposite way. It doesn't matter what you call it. It's a way to get in the market very quickly and take advantage of trends that are created by news events. And that's why and how we use the reverse continuation. Here's some important points just in our trap trade history. When we first started out, we had an adjustment field, an item. It's a button actually that we don't use anymore. In the old days when we traded the trap trade, we used to actually move the orders, all of them, right before the news. And that adjust button is still in the software, but we don't use it right now because it's not used in these current markets. One day, the markets might move the way they used to move, and we will use that button again. But it's just some history and some info you need to know if you use the strategy. We started with version 2, and we're now on a version newer than version 2. Tiers are brackets. The trap trade, traditionally, we called the tiers brackets. Excuse me, they're no different. A tier is just an order above or below price. That's a bracket. Is there slippage on trap trades? Generally, what's really interesting about trap trades is there's no slippage or very, very little. Because when you go the opposite direction of a news event, if the news is moving up and you're going short, it's fantastic. You don't have slippage. The stop, of course, is very important. Not all these items are items I'm going to talk about today. Margin has to do with cash accounts. You have to have a certain amount of money in order to be able to trade. But that's just some highlights of previous trap history. Can a trap trade be a family money trade? Absolutely. What is a family money trade? Family money trades are our best setups, the setups that we trade over and over that we feel will bring a profit on a regular basis. Those are our favorite trades. Any trade can be a family money trade. Those are trades we just recommend even our family would trade them. How do we find trades? How do you find any trade? We use the calendars to find the events that we think are tradable. And then we use NinjaTrader, the playback feature, to test the events. And we also use the ruler to go back in time. Look at the sizes of spikes. Look at the size of a reversal. It's very easy. Let's say this was a news event. You can go right up here to the top of the chart and click the pencil, then click the ruler. And now you could see, well, how much did this event move on the news? And it moved 91 ticks. You could see it spiked over 4 minutes. It moved 91 ticks. It did not do a good reversal. If this was a news event that we were studying, we would look at that as a breakout because it didn't reverse. The first minute didn't reverse at all. The second minute, no reversal. It didn't reverse until 5 minutes later. So that might be one thing. What we would look at that event and say, hey, we might have a new trap trade on our hands. Then we would go back, look at the calendar to give us the previous dates of those reports, because that's one of the things the calendars do. Forex Factory, investing.com, they can give you many dates of the same report so that you can go back and study the event by looking at the dates of its reports. So for instance, today's natural gas trade, it shows us by just clicking the news and then scrolling down previous dates that report came out. And we can use the NinjaTrader playback to enter those dates into the software and use the software as if we were trading on those days. That's how we find trades. We use the calendars. There are 4 calendars that we use and love, and I'll show you what they are. We've got Forex Factory, which I kind of showed you already. That's Forex Factory. They list, all you do is, if you're at the top of Forex Factory, you just click calendar and you get a full week of data. Then we also look at investing.com. Click this week and you get a full week of data. The point is, it's news reports that are coming out, and you can find the dates those reports come out. So these calendars allow us to test reports because of the info they give us. We also look at tradingeconomics.com, and we look at Financial Juice Pro. Financial Juice Pro has a nice feature where it has a news squawk box. We can hear the news in our ear set. It's got a talking news. We love that feature. Getting back to the trap trade, what are the keys? Excuse me. What's a tier? So the tiers are the brackets, right? What is a spike sheet? So when we study and talk about the trap trades in our trade room, we often create what we call a spike sheet. When we take a trade, we often show our members the spike sheet we created. So it's the movement that we've calculated month after month after month after month, and why we consider this report to be or not to be a trap trade. And this particular report had very inconsistent numbers and had not been a good trap trade until lately. A spike sheet is basically a dated sheet that shows the spike every time the news comes out. That's the best way to characterize it. It's a dated spike sheet. It shows the spike, the date the news comes out, going back sometimes years. So we can look at that event and decide what's the best way to trade it. What is the zone of safety on a trap trade? The zone of safety on a trap trade is the second order, the second bracket, plus the stop. So if your tiers are 20 and 30 and your stop is 25, 30 plus 25 is 55 ticks. That's your zone of safety. If a trap trade goes greater than 55 ticks, that trade would stop you out because it would burst through your stop. Obviously, we set up the trap trade so it doesn't get the stop being burst through. And you come up with the numbers for the tiers, the orders, by studying the spikes. So you take that spike sheet, you study it, figure out, well, okay, it's been spiking 30, 38 ticks, 45 ticks. So you figure you've got 30 and 50 might be good orders. That's what a spike sheet is. The opposite orders become your targets. So when a trap trade takes place, when it sets up, you've got your orders above and below. This trap trade's going to go up. So the top orders are going to get filled. And the bottom orders now become your targets. You can then move those targets a little bit closer. Because notice they're far away. They might sometimes be too far away to get hit. So you see how I moved them up during the trade? It's just trade management. Normally you'll move your targets up. Sometimes a trap trade won't fill both orders. And the second order won't get filled, and there will be an extra target in the way of moving your stop to safety. We have a cancel the outer order button that lets you get rid of the extra order so you can move your stop to safety. Now, there's also a feature if a trap trade really doesn't reverse and it just doesn't work well. We have a combine button that lets you combine both orders into one position. to make it easy to try to exit the trade with as small of a loss as possible. That was a button called the combine button, and it's just a way to help manage the trade, to help you to get out of a trade that doesn't work. Fortunately, what's great about trap trades, so often the market reverses and changes direction after the news takes place. So let me show you one more time, because this was such a perfect example of a perfect trap trade. So remember, it all starts with an email. We send our members the DMM, the trade report, the day before, the FOMC. They know the tiers we're going to use. They know the stop. They have a real good idea. We also had an NQ set up. We come into the room. We put our orders and the data into the software. The software puts the orders on the chart. We talk about the trade. Is it a good day to take the trade with money? Should you only simulate it? We talk about all that stuff. It was a great trap trade. The price went up, price reversed, and then we were able to also take a discretionary reverse continuation trade after the trap was over, and we made our money. Or we could have lost our money and then had an opportunity to make it back. We put a reversal on. The market cooperated 2 times. Put the reversal on, hit the target, put the reversal on, hits the target, and we're done. That's a trap trade. That's a reversal continuation. Reversal continue. I showed you the setup. Very easy to put it into our software. With a reversal continuation, let's say we just finished trading and we didn't even put the setup in, and we want to get going for some reversals. Right click the chart, click strategies, double click news trader. We're not trading a spike, so we're going to change breakout to reverse continuation. You could leave everything the way it is. There is a default setting for 15 ticks and 40 ticks and a 25 stop. For argument's sake, that would set up an instant. I like to edit my trades, usually with a reversal. Maybe I'll trade 2 contracts, 1 position. Maybe I'll go for 20 ticks. I don't need to move my stop in a 1 position trade, and let's say I have a 25 tick stop. That's all I have to enter. I choose the account I'm trading on. I label the trade, reverse continue, apply it and OK it, turn it on by just clicking the enable box, and there's my buttons. Now I'm watching the market. If I want to get into the market long, I click the instant long button and it puts my targets and stops on the chart. If I want to get in short, I click the instant short button and there's my target and stop, and I'm in the trade. Reversal continuation is a great discretionary entry. If you think the market's doing something that you want to take advantage of, it's a great opportunity to do that. All right, any questions? Any other questions? So listen, I want to thank everybody for coming to the webinar. The trap trade and the reversal trades have been really profitable setups for us. Let me show you another trap trade. Retail sales has been a great trap trade. Different than the FOMC. It's a whole different setup. November, this is an older video, but back in November, we took a retail trap trade. The price shot down and it filled us long and did a fantastic reversal. So I was able to bring my stop up and trail until it took me out of the trade. That was almost $500 in profit. That's the beauty of the trap trade. When our research really works, it changes direction and we get to take advantage of that change in direction. So everybody, here's the deal. You can learn all the ins and outs of appointment-based trading. I will guide you step by step in all of our trade rooms. Here is what we include if you want to learn how to do what we do. You'll get all of our News Trader software, all three strategies. The News Trader software suite, our Magnet Trade, the appointment-based trading method is taught in all the trade rooms every day. Choose the events you want to trade. We're going to teach you how to trade on a schedule. When earnings season is in full force, you'll take part in our earnings trade rooms, and they're starting in a couple of weeks. Learn how to trade selected stock earnings with futures. That's what we do for earnings. And trade on a schedule, like I said, your schedule, the schedule you want to trade on. You'll get our News Trader software. You'll receive the daily market movers the day before, just like all our members do. We have a fantastic offer. Full Pro Trade Room subscription is included. Okay, all of this is very valuable. It's lots of fantastic information. We'll include the trap trade software, the magnet trade software, the reverse continuation. You can trade the way we trade in a prop account. We teach you the best ways to do what we do in a prop account. We have many members trading in prop accounts. All the class sessions are included. Everything is included in this offer I'm going to make. Trading earnings with futures, our family money trades, breakouts, magnet trades, spike trades, range trades, news reports, everything. A full 10-minute Trades Pro membership, 30-day trial for $20.25. It renews at 97 when the month is up. All you have to do is email us. I'll give you the email address. Just email before the billing period expires and we'll cancel your membership and it won't renew. $20.25 for 30 days. www.gopro25.com. This offer expires Saturday at midnight. Saturday at midnight. Everything that you get, the News Trader software suite with the reversal continuations, the trap trade strategy, magnet trade, which is covered in other webinars. I'll show you where to get those webinars for free and to watch the trap trade. Appointment-based trading, we teach the whole methodology all the time in our trade room. We teach you how to choose the events. We show you the best events to trade. Earnings trade rooms, trading on a schedule. We'll teach you how to trade earnings the way we trade. www.gopro25.com. It'll take you to our website. Very easy to just place a quick order for the trial. $20.25 for 30 days. Just scroll down, enter in name and number. You know the deal. It's really easy to place orders on the internet. I don't have to tell you that. And then if you need help or you have questions either before or after you're a member, you can email us, help@10minutetrades.com. This is the address for our YouTube channel. I'm going to post that into the chat so everybody has it. You should join our YouTube channel. We stream on YouTube. We have a lot of fun. We love teaching what we do. And we're really good about showing you how to do everything that we do. We don't hold anything back. And here is the link. For the YouTube channel. So definitely you might want to go. There's lots of webinars on there, trap trade, other webinars going into this in more detail, some classes on there, magnet strategy, magnet strategy webinars, more on the reverse continuation, family money trade info. So a pro membership for 30 days, just $20.25. It is a steal. It's ridiculously cheap. So www.gopro25.com. Expires Saturday, and I want to thank everybody for joining me, and I hope you're having, if you're Jewish, having a nice holiday. Make sure you're fasting, and if not, I'll see everybody in the trade room tomorrow. So everyone, have a great rest of your day, and thanks for joining me on the webinar, www.gopro25.com. It is a deal and a half, and I'll see you all in the trade room. Thanks very much, folks.